You're listening to Inside Financial Inclusion.
A podcast on the people and policies that are shaping inclusive finance worldwide from the Alliance for Financial Inclusion.
I'm Aban Haq.
And I'm Robin Newman. Today, we're going to be talking about the nearly 3 billion people globally who still live in inadequate housing. Most of those people are not homeless. They have a roof over their heads, but they may also have walls that let in the rain, floors that harbor disease, or even structures that might not survive the next storm. And yet, most countries in the world do not mention housing at all when it comes to their national financial inclusion strategies. So the single largest investment that most families make falls through the cracks. We're going to be asking why this is and what could be done to fix it.
Robin and I are delighted to have with us Patrick McAllister. Patrick has dedicated his career to finding solutions that make housing markets work for the poor. His work has taken him to regions such as Asia, Africa, and Latin America. Patrick is currently the Director for Finance, Policy and Regulation at Terwilliger Center for Innovation in Shelter at Habitat for Humanity International. That was a mouthful. We'll be speaking to Patrick on why it is so difficult to fund low-cost housing and what can be done to solve the world's housing crisis. Welcome to the podcast, Patrick.
Thank you. Thanks so much for having me.
So let's dive into housing finance and policy. Robin mentioned that although this is such a global crisis, if you look at the numbers, billions are affected by it. It affects quality of life for so many people in emerging and developing economies. But the policy conversation in financial inclusion hardly ever mentions housing finance. So I guess my question is, when you talk to policymakers, central banks, is it always an easy conversation, or are there misconceptions that you first have to clear up before they let you through the door?
That's a great question. It's not difficult. Everybody realizes that there is a housing crisis that is global and that is affecting people in their jurisdiction. So that part of it is not complex. The difficulty lies in helping policymakers see the connection between the policy frameworks that they oversee and the housing finance that people need to make those improvements that Robin was alluding to earlier. The biggest impact for housing finance globally is the macroeconomic environment. So if you're operating in a jurisdiction which has instability in inflation, in foreign exchange risk, you're going to find it very difficult to create a market that can serve the vast majority of the population with housing lending, because those loans require slightly longer tenors and they have to be a little bit larger than your traditional kind of unsecured lending. So policymakers have a big role to play, and that's where we have to help them understand the connection between the high-level policies and the retail level realities on the ground for families.
Patrick, that's really interesting that you mentioned the linkages to the macroeconomy there. And of course, for AFI members, central banks, and financial regulators, that's very relevant indeed. I have a bit of a theory here as to why it might have taken so long for the financial inclusion and the housing finance agendas really to come together. And I'd like to test that out with you. And that is there's a bit of an elephant in the room here, which is the global financial crisis, thinking back all the way to 2008. And of course, there were many complex causes of the crisis, but in amongst it all were housing products targeted towards low-income families in the US, the so-called subprime mortgages. Do you think the legacy of that crisis has in some ways made financial regulators a little bit cautious when it comes to housing finance, maybe a little bit overcautious, even though what you're arguing for is something very different indeed?
Yeah, I think that's absolutely right, Robin. But what happened after 2008 was a big contraction in the financial vehicles available to both investors and financial institutions that would allow them to make those loans. And so in a way, we sort of threw out the baby with the bathwater in that case, and it did make regulators very shy to engage in housing, and for good reason. Let's be clear. And one of the big challenges that we have when we're working with low-income populations is you're looking at an asset, the biggest asset that they own. It may be worth the equivalent of, say, 40,000 euros. And they need to make an improvement to their home, which is worth maybe 1,000 or 1,500 euros. Traditional housing finance is considered mortgage finance. So basically, you put a property and any structure that's on that property, you pledge that as an asset to a bank, and the bank gives you a loan. But if you're making a very small improvement, say in that range of less than 10% of the value of the property, and you're pledging the entire asset as collateral, that leads to a lot of dislocation in the financial transaction. So transaction costs are going to be very high. Now, step back for a minute, and you have to realize you're operating in this market where loan rates are already very high for lower income people, right? And so you need to try to find a way to bring those rates down. But if you're following the traditional housing lending model, you're actually driving rates up. And so there's a dislocation there that needs to be addressed. And there's lots of ways that we can address that. But you're right, Robin. First, we have to help those policymakers understand what we're talking about is not leading them down a path to a financial crisis. And proportionality plays a big role in that. I personally come from a regulatory background myself, so I understand that need for proportionality. And if you look at the overall size of the market, and if you look at the overall size of the transaction, you realize that the risk is actually quite small for a lot of these loans, but they're being categorized as very high risk. And so we also have to find a way through data and through information to help policymakers see that by enabling housing lending for lower income families, they are not, in fact, endangering that family, and they're not, in fact, endangering the financial system.
Just building on that, how would you see the division of labor here between what we're asking of the central bank and the regulator versus other parts of the government, other parts of the private sector as well? Because as we know, the central bank has core mandates, which are usually price stability, financial stability, and every time they start to get into topics that may seem a little bit adventurous or outside of that mandate, they're told to stay in their lane. So how would you characterize the specific role of the central bank here vis-a-vis those other actors and what they should be doing?
So the central bank plays a critical role, but it can't do it on its own. And I think most impactful roles that the central bank can play is as a coordinator. If you think about housing finance, you're talking about the three different markets that all have to operate in a synchronized manner. And we are talking about markets here. We're not talking about, pure socialized housing where governments are paying for housing out of their fiscal budgets. We're talking about enabling the market to serve the vast majority of the citizens in a country. But you have three markets that have to play together. You have the market for land, you have the market for construction services, and you have the market for finance. If any one of those is not operating in a way that allows the majority population to access finance, land, and construction, then the market isn't going to be able to function. And so the regulator plays a critical role in bringing together all of the government actors. Because this is all tied to GDP growth and employment growth, I would argue that the central bank is a good facilitator of a group process, a high-level call to all government bodies to engage and ensure that housing is available to the entire population. Now, once that is set at a very high level, whether a president or a prime minister level, then each government body has to figure out what their role is, and that requires a coordination mechanism. And that's not an easy task. particularly when you get politics involved, I mean, we have to deal with the political economy of the moment in the specific place. And that's why there is no one size fits all. You need the macroeconomic stability, you need political stability, and you need that coordinated push across government agencies that are involved in the three markets of land, construction, and finance to all be moving in the same direction. And it takes time. I mean, you're talking about a good, 3 to 5 years of just getting everything aligned and putting into place the variety of policies that are necessary in that particular market, in that particular jurisdiction.
Yeah, Patrick, it's very interesting. You've painted a slightly complex picture. I think the point you make about one size doesn't fit all, and you need to have a very contextualized and jurisdiction specific approach. There's a political economy element which needs to work. The macroeconomic stability that you mentioned earlier is a key factor here. And then you also need leadership tone at the top that is translated into a coordinated government effort. And like you said, all of this is not easy, very difficult to pull off. So I think I'll be very interested to understand, maybe you can share a couple of examples of markets where you think things have moved in the right direction and you're already seeing impact in terms of people's access to affordable housing.
Absolutely. I think one place to look for inspiration to some of the problems that are affecting some countries today is Egypt. Now, Egypt is dealing with a situation where they have expanding urban populations, and this is going to be the case in several other jurisdictions as well. Particularly, we know that in sub-Saharan Africa, due to demographic shifts, we're going to find most of the working age population will be in Africa, and most of the urban population will be in Africa. And so we need to find ways to transform what in many countries are currently quite rural focused countries into urban focused countries. And Egypt is a really interesting example for that because their solution, and again, this is a solution that works for Egypt. I'm not saying that anybody should adopt this wholesale. What they did was they looked at their reality and they said, well, we need to build housing for people in urban areas where they can access employment, where they can access services. And it's not going to be by just continually expanding Cairo. We have to build new cities. And so they set out this process to build new cities across Egypt. And they did land banking to ensure that they could develop a sufficiently large plot of land to house these people. They manage the construction process so that they can build the types of buildings that are needed. And then critically, on the finance side, they built worker housing that workers could own through a specialized mortgage program that allows lower income people to access the finance that they need to purchase the units that they'll be living in. So that's a model that I think is really important to learn from as we face the demographic changes globally that we see and that we know are coming. And I do want to point out here one other challenge is informality. A lot of people that are working in the world work informally. That is, they don't have a pay slip, they don't have an employer who they can go to prove that they have an income that's going to last over the term of the loan. And that has traditionally been a huge hurdle for retail financial institutions making loans to these populations. But in the last 10 years, we've seen an absolute explosion in digital underwriting so that informal incomes can, in effect, be formalized through large data models where you're looking at across a country and sometimes across multiple countries to understand how a specific product at a specific price can be affordable to an informal worker, because you know that that informal worker on average will make a certain amount of money, even though they can't document it. And you know that that worker will be employed for X number of years, even though they can't document it. So by formalizing the informal, we're able to extend financial services to a much, much larger portion of the population than we could before we had this technology solution.
Patrick, those are very rich examples. I'd like to ask you, if you had an hour in a room with a central bank governor and her team who said to you, look, we didn't include housing in our first national financial inclusion strategy. It's a gap. We need to address it. What would your advice be on how they could go about doing that? What would the policy journey look like there?
Yeah, Robin, I'll just take a moment now to point out that Habitat and AFI have been working together, and we have a task force of 10 AFI member central banks that are looking at just that question. So we are putting together that roadmap. That task force is in the process of doing in-country implementation in 3 countries that will look at the policy framework that exists, diagnose some of the barriers that are preventing that jurisdiction from enabling larger scale affordable housing finance, and identifying both low-hanging fruit and some longer-term objectives that that country should adopt in order to make their enabling environment for affordable housing finance that's inclusive, that's green, more accessible to everybody. So that's a process that we're on now. I can tell you, going back to what I said before, if I had 5 minutes with a central bank governor, I would say macroeconomy, 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 get price stability, and the rest is much, much more easy to manage.
Thanks for that, Patrick. I think that will resonate quite nicely with all the central bankers because I guess inflation is their favorite topic to talk about. They can go on for hours. I want to take you back to your previous answer where you talked a little bit about the market itself. You mentioned that the formal lending systems need to accommodate informality if we are to address the low income housing problem. You've also said in the past that what we need are new products, new institutional models, not just scale down mortgages. So it almost takes me back to the time when microfinance was just taking off, and there was this realization that the existing financial institution and private sector is neither incentivized nor equipped to serve this market. Is
Yeah.
my reading correct? Are we in a similar place with the housing finance market? And are we at that tipping point where we'll see this market shifting with new types of products, institutions, business models coming in?
I think we are very much so. And another analogy that fits is that microfinance is not always appropriate for housing. In the same way that we saw earlier, bank finance isn't always appropriate for, small businesses or micro businesses. So microfinance institutions kind of stepped in to play that role. Now we see microfinance institutions that are largely delivering a single product. And we need those institutions to now diversify their product offering to meet the diverse needs of their people. I'll tell you just a little story. So I grew up, and my mother was a banker. And so I spent a lot of time at the bank. And she was a banker of the old school, where she knew exactly what people were borrowing for when she was making a loan decision. She knew who needed a new roof. She knew who needed to pay for their bills until some invoices were paid into their business. She really understood their lives and what their needs were, and she was able to make loans according to those needs. I think we've lost that a little bit, and so we need to get back to that scenario where the financial institutions that are serving low income people not only understand what their needs are, but also have the tools to address those needs. And one of those needs that we know everybody has is housing. And we also know that 20 to 30% of all microfinance loans are used for housing. Regardless of that they're borrowing for their small business, they're actually using it for their housing. And so we need to help financial institutions create products that meet the needs of those people. And sometimes that is a regulatory burden that we have with the financial institutions not being allowed by the regulator to make a loan for housing, or insisting that the loan that they make for housing follows a set of rules that are more appropriate for home purchase of a full home than, say, upgrading a smaller home. So I think the market needs to adapt, and they need the regulators to help them be able to adapt.
You're someone that's got many different vantage points here with 20 years experience, both from the regulator side, also from the financial institution side, working with central banks now as well. From the outside in, it appears that the housing finance space is one where there's a lot of promising work, a lot of interesting pilots, but maybe challenges sometimes to really graduate and get to scale. Is that fair? And what do you think it would take to overcome some of those bottlenecks going forwards?
If you're bringing everybody together around the table to find the solutions, then I think you have a fighting chance of developing solutions that are going to work for the entire ecosystem. So you have representatives who understand the lived reality of lower income people in emerging market and developing countries. You have people that understand the financial institutions that serve their needs. You have people who understand the construction industry and can help to unlock some construction practices that will be both affordable and sustainable and inclusive of people with varying backgrounds and abilities. Then you have to bring together the investors. I mean, without the capital market investment, none of this is going to work. I'll just give you a brief example. We at Habitat launched a fund called Microbuild, which was a $100 million fund that was intended to serve the needs of lower income people trying to improve their housing through mostly microfinance institutions. And that fund was successful. We operated with 62 different financial institutions, and that fund itself was able to generate about $230 million in investment with, rollover funding and things like that. But the big news here is that $100 million ended up generating over $1 billion in finance, because you were providing investors with a case that they could invest in. So now you're going from a small scale pilot to something much bigger and much more systemic. And that's what we need in this space generally. We need to find ways to connect investors to realistic projects that they can invest in, that they can get their returns from, and that will allow them to serve the needs of their entire population.
Thank you. You've mentioned already, Patrick, the partnership that AFI and Habitat have embarked on here. But linking to your diagnosis of the challenge ahead, what would success look like for you with that partnership? What do you want to see in 5 years' time?
So what I really want to see in 5 years is that this project that we're just starting out, that will become a hub at AFI, a permanent place where any AFI member can go and learn the lessons of inclusive, affordable, and sustainable housing finance from their peers, and that AFI will always be a home for any regulator that has a problem and needs a solution. That would be kind of my ideal world in 5 years' time.
Patrick, thank you. I think we've covered a lot of ground today. And what's really come across from this conversation is that financial inclusion and housing finance are very much aligned agendas. But sometimes there's a bit of operational fragmentation there, perhaps, that is preventing us really realizing the synergies as we might. You painted an optimistic vision, too, of how that's starting to change and what you hope to see over the years ahead. So a lot of exciting results to look out for from the partnership. But for now, we thank you very much for your time, and we wish you the best with your work.
Yeah, sure. I want to thank all of you for the opportunity to come and speak with you. I think this has been a great conversation, and it's been a pleasure.
Thanks for listening to Inside Financial Inclusion.
If you enjoyed today's podcast, subscribe to the show for regular updates and new episodes.
I'm Robin Newnham.
And I'm Aban Haq. Until next time.